I'm the Deputy CEO and the Chief Investment Officer of the Africa Finance Corporation, or AFC. We are a billion-dollar infrastructure financing institution headquartered in Lagos, Nigeria, but we cover the whole of the continent and we do investments across infrastructure across the whole of the continent. We're kind of like a unique institution in that we're 40% public sector owned and 60% private sector owned. So we are ourselves a PPP. So we understand the tensions between the public sector and the private sector. Since we were established in 2007, we've invested over $400 million in infrastructure projects across, at the moment, 9 countries across Africa. And we've commitments for a further $400 million in investment. So we put our money where our mouth is already. And we've got some scars, and we've also got some success stories, which over the course of the session, we'll maybe have a chance to also discuss as well. To me, this is one of the key issues that's preventing projects moving forward on the continent. This issue of developing projects and getting them to the stage where they're bankable. I think it's been recognized that it's a major impediment, and it's actually one of the reasons why my particular institution, the AFC, was established. We were established with that in mind, that lack of capital is probably not the major issue. There's a lot of money earmarked for Africa. And there's a market willing to pay for services in most countries in Africa now, more so than maybe perhaps people realized even 5 or 10 years ago. But it's just, we can't seem to unlock the capital and get the financing in place. So this early stage risk of the development risk is something that we actually take on board. We have set up a whole division that looks at project development. And the issue is one of time, the issue is one of cost, and obviously the issue is one of risk. And what we found is that a lot of the traditional financiers, I mean, lenders don't want to touch this for obvious reasons. And we often find that a lot of private equity funders also don't want to touch this. Again, their funds usually have a lifespan, and they can't be spending 3-4 years developing projects when they need to be writing checks pretty quickly. And so developers and sponsors need more support. And where we've come out as an institution is that we do take a stake in early stage in projects and help the developers develop the project and take it to financial close. We can only do that on a select basis. We can only do that on certain cases. As we've been doing it now for the last 3 years, it is very, very difficult. And you have to be able to be compensated adequately for that risk if the project reached bankability stage. And you normally do that with a stake or with a carry or with some form of premium or developer fee. One thing we've been noticing is that lenders are becoming a little bit more averse to paying out developer fees, which I think is a mistake. And it's something that, you know, we lobby the lenders in that particular area. It's very important. But without these developers, you can't get to the projects that you want to write a check and invest. So we have to find a way to support them. If you look at the DFI community, about 5-7 years ago, they kind of realized that this was a really problem, and they started providing subsidized money, but really more for feasibility studies. And what happened was those feasibility studies would be done, and they will go somewhere and collect dust. What you really need is developers who are going to drive and develop those projects. So what we're trying to put together ourselves, AFC, along with a couple of other DFIs, is actually project development facilities where developers and sponsors can access this funding, which will be on a risk basis. But you can draw down that funding and then use it to develop your projects. And then in exchange, the people providing that fund will either take some stake in the project later on. But it does help to unblock this issue, which I think is a real major issue for developers. I don't know if any of the other panelists want to touch upon this issue of developers and sponsors. Okay, let me ask another area which I wanted to address, which was this issue of infrastructure as an asset class. I think all of us want to get to the stage where Africa has infrastructure as an asset class as to other parts of the world. I'd like to ask the panelists, how far do they think we're going? How far do you think we've gone along this path? Because the idea, of course, is that infrastructure is supposed to be a pretty low risk, fairly boring, fairly constant cash flow type of investments. And then you can unlock pension funds and insurance funds and things of that nature. But still at the early stages in Africa, there's a lot of risk associated with private participation in infrastructure. So maybe perhaps we're not quite there as an infrastructure, as a class, that we can go to the pension funds and insurance companies and unlock that funding. There's a theme that's coming through, which is try and simplify, try and keep it simple. It's still early stages on the continent in terms of private sector investment in infrastructure, PPPs, etc. But as somebody who's actually tried to do that, the brick wall that we often come across is the lenders. Because the lenders then, when they put their documents down, they do insist on quite rigorous and robust criteria before they will lend. So I don't know if any lenders have a perspective on this, or anybody, advisory companies who work with lenders can point on this. I find that lenders often are quite unflexible, should we say. And I think that happens a lot because of experiences. Unfortunate experience that happen. But if we're going to try and break this, I think people have to take more risk on both sides.
Doing business in Africa, you can't afford to be without Africa Investor.